Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. In last couple of minutes, the market has picked up pace. Nifty Bank, which was in the red, it is in the green, but of course not at those high levels. Midcap index up around 400 points, and a lot of individual movers.
Individual movers mainly based on earnings that are coming in thick and fast, hitting the screen. Last 30 minutes, you've had almost 4 companies that are quite widely tracked: BHEL, M&M. You also saw Birla Soft. You also saw some of the other names coming up, Deepak Fertilizers coming up, and Neel Kamal flashing on your screen. But quite a lot lined up on this particular show itself. Let's start off with the top headlines. Stocks see small gains ahead of the important US Fed meet today. Pharma and healthcare are the bright spots, even as PSU banks and realty lose sheen. Midcaps surge.
Dixon Technologies spikes and beating estimates on traction in the mobile segment. Management tells CNBC-TV18 that IT hardware will contribute in meaningful numbers in next 12 to 15 months. Goldman Sachs and CLSA turned bearish on the stock.
Torrent Power zooms on the back of a good performance in Q1. Revenue climbs 23% on a year-on-year basis, while net profit also jumps 87% on a yearly basis.
Godrej Properties surges after posting a good set of earnings in the first quarter. Company reports a 300% surge in bookings on a YOY basis. Management says they are on track to achieve or exceed FY25 guidance.
IndiaMart falls on lower than expected subscriber additions in Q1. Traffic dips to 267 million from 269 million in Q4 FY24. Nomura says it is concerned about weak increase in business inquiries, while Ambit sees the current weakness as transient.
Okay, those are the top headlines. Let's quickly tell you about what the markets are doing. 84 points higher on the Nifty, very close to the day's high. Mid-caps are the ones which are surging, doing really well. So that index is up around 420 points. Bank Nifty has picked up pace. It has recovered from the lows, but absolutely flat with some positive bias. Nifty Pharma, Nifty Mid-caps, the IT space, they have made a comeback. So not many losers that we are seeing in the markets today. But as Vivek was saying earlier, earnings are coming in thick and fast. So let's talk about one of those today. Arvind Smart Spaces is on our radar for quarter one. Companies saw improvement in both bookings and collections on a YOY basis. They say that quarter one performance is driven by majorly sustained sales in private placement to land partner. Kamal Singhal, the MD and CEO at the company, is joining us now. Mr. Singhal, good afternoon. Thank you so much for joining us. Well, it's a 200 crore quarterly run rate that you've seen this time around. Do you think you'll be able to improve on it in the coming quarters? Because last year you did around 1100 crore of sales. What's the outlook for FY25?
Sure. Good afternoon. As you very rightly said, we did 200 crores for the quarter, and last year it was 1100 crores for the year as a whole. But I think we are, in any case, the way the launches are planned, a little H2 heavy on all the launches and fresh inventory coming into the sales pipeline, and hence we're quite confident that we should be able to catch up. And the year as a whole should look at a very decent kind of growth over 1100 crores that we did last year.
Could you just quantify that? You spoke about, there is going to be execution. Could you give us a sense of, in FY25, which are the projects where you will be able to go ahead and recognize revenue? And if you could quantify that in terms of FY25 top-line figures.
Sure. In terms of financial numbers, normally we would not give guidance on that.
We understand that. So what is the launch pipeline where you would be able to recognize revenue?
So launch pipeline is pretty healthy. This year we are targeting a launch pipeline of anything between 2300 to 2500 crores of inventory in the remaining part of the year. This includes 3 major projects in the city of Ahmedabad and Bangalore. These are fresh projects, very large size projects, and we are only counting the phases that will be launching from these projects, amounting to 2300 to 2500 crores of fresh launches. And then we will also have sustained sale coming from the existing projects which are already launched apart from these new ones. So put together 23 to 2500 crores is the launch pipeline that we have for this year, for the remaining part.
Okay. And how much would that convert to bookings, Mr. Singhal? I ask you because you've seen around 41% CAGR over the last 4 years, over the last 5 years, that is. Last year you closed with bookings growth of 40%, the collections grew by 46%. Is that something that you'll be able to continue?
Last year was an extraordinary year, and we are generally consistently growing to the extent of 25, 30%, 35% thereabouts on all major parameters, including fresh bookings. So over 1100 crores, I think 30% growth should be something that we should be targeting, and we are targeting. So that kind of growth we should be able to see this year again.
Okay. Mr. Singhal, what's interesting about your particular model is that typically you don't go ahead and buy the land bank. So now, since you're going ahead and going into different geographies like Bangalore, will you change your strategy and also give us a sense of the launch pipeline that you have in Bangalore and what other geographies you're targeting?
Sure. So we are doing outright deals, we are doing JDs, we are doing JVs. So all these models are extremely important. Of course, we are asset light as a company, and hence JD share in the overall scheme of things is higher than outright purchase. But going forward in the next 2 to 3 quarters, I think we'll see quite a bit of action happening on outright deals as well. And a lot of this investment will go into the markets of Bangalore as well. We are targeting to launch at least 2 new projects in the remaining part of the year in Bangalore, and at least 4 to 5 projects in Ahmedabad. So going forward, it's going to be a mix of JD and outright, and will remain heavy on JDs, as you have very rightly said.
Okay, and you've been talking about some land buys that you will be looking at in FY25 and other years as well. So, Mr. Singhal, in that case, how do you fund that? You have said that there is enough room for you to take up debt as well. You are net cash right now. You have entered into partnerships with other financial platforms. So, what is the plan with financing all these projects now, and what would the amount that you need for these expansion plans?
We have 3 sources of investments. One is obviously the internal accruals, which have been very strong in the last 24-25 months. We have accumulated more than 800 crores of free cash from operations itself, and the healthy trend of this internal accruals continues. So that's one source. The other obviously is the debt raising capacity that the company has. Today we are net negative debt, 50 to 60 crores thereabouts. But even a very conservative level of debt raising will mean that we can raise 300 to 400 crores within this financial year to fund the new pipeline. And apart from that, 300 to 400 crores can be invested through the platform we have with SDFC. So all put together, 800 to 900 crores is something that we are looking to invest on an imminent basis next few quarters. And that should be sufficient to create a pipeline in excess of 5,000 crores for the company in the next few quarters. So that's what the target is, 800 crores thereabouts of investments through these 3 sources, and which will create 5,500 crores rupees of fresh inventory for sales to continue.
Okay, so you've spoken about debt and how you plan to fund the capex. Now, in 2021, you had a preferential issue from HDFC Capital Advisors. They hold almost 8.8% stake in the company. Now, going forward, how do you plan to go ahead and take this particular partnership forward, and what will be the contribution that you have with them in the projects that you all do joint?
So HDFC has been a very, very long relationship, not only at our company level, but also at the group level. It's a very, very long-standing relationship. They were the primary banker when we started real estate as a business. Then we had a platform deal with them, which was platform 1 for us. Then it evolved into a partnership where they participated at the holdco level and picked up 8 to 9% of equity of the company, as you said. And thereafter, we created platform 2, which is of something like 900 crores thereabouts, which is under investment at this point in time. So this partnership has always been growing qualitatively and quantitatively, and we are building on this partnership further. So once we are exhausted with the current platform money, obviously we will be looking at more avenues to work with them and invest further into future projects.
Okay, all right. So we'll speak to you again when there is an update on those projects. But Mr. Singhal, it was a pleasure. Thank you so much for joining us and speaking with us about the outlook going forward. That's the word coming in from Arvind Smart Spaces, expecting around 30% growth. And they do have a strong launch pipeline that will convert into bookings this year itself. Slip into a break. When we come back, we'll be joined by the management of Capital Small Finance Bank to discuss the quarter gone by. Stay tuned.
Welcome back to Midcap Radar. The midcap end of the market continues to hold up very steady, 0.8% higher as far as the midcap index is concerned. The next corporate on our radar is Capital Small Finance Bank. Q1 was a good quarter for them with healthy growth in business momentum. Their asset quality has been stable while slippages have declined. To discuss more on the Q1 performance, Sarvajit Singh Samra, MD and CEO at the bank, joins us now. Good afternoon, sir. Thank you so much for joining us. First up, congrats on a good quarter. While the rest of the banking sector has been struggling to get deposits, both on a year-on-year as well as on a sequential basis, you have managed to increase your deposit base. Could you give us a sense whether this particular trend can continue going into the rest of FY25 as well? And what is the target that you have for advances?
Good afternoon, Vivek, and thank you for this connect. Actually, the growth in advances and deposits is very much in line with the bank's estimates. Normally, if we see Q1 with regard to advances, is normally a stable quarter where if historically we have seen not much growth in that and even a slightly decline if you dig into the previous Q1s of previous years. But for this year, the growth both for advances and deposit has been very healthy. We have made a disbursement of 754 crores in this Q1 itself, which is a 62% growth on year-to-year basis and a 12% growth on Q-on-Q. So we are very much aligned with our business guidance that we have given at the beginning of the year, that this year we'll grow our advances by 22 to 24%. And actually, if we slightly dig a bit back, like say during the last two quarters, I'm saying the quarter Q1 and the last quarter of the last year, because we got listed in February 24. So after the listing, the growth capital was there. If we dig into that 14 crores of disbursement has happened after our listing, which is a growth of 12%. So I'm very confident that
and what is the deposit growth you're targeting? You spoke about the advances growth.
Actually, the thing is, we are a retail deposit franchise, and to fuel our advance growth, we are very much aligned. So we take this call since there's a legroom available to increase our CD ratio. Levers are available in the balance sheet. So deposit has never been a problem for us. We are a retail franchise for last more than 24 years. So we'll be pushing our deposit growth to align and to fuel our advance growth.
So when you say you'll be pushing it, Mr. Samra, YOY this time around the growth has been 10%. Do you think that is a number that will continue? Just trying to understand, because deposit is at the end of the day the raw material for loan growth as well, right? So what is the guidance you have here?
So absolutely, say to fuel a growth of 22 to 24% of advance target that is there for us during the year, we need a lesser, say slightly lesser growth in deposits, and we are very much aligned with regard to for that deposit growth. And you would appreciate even in this Q1, even we have improved our CASA ratio as well. Yeah.
Right, sir. So before we move on, there's been a significant development as far as regulator is concerned. RBI has come out with norms. These are draft norms, of course. As far as liquidity coverage ratio is concerned, prima facie, what will be the impact you will face on the back of adhering to these norms?
Say the way otherwise, of course, we have been pushing, say, mobile banking and all to our customers and all. Impact is going to be there on the industry if these guidelines are, say, implemented in toto. Still, they are draft guidelines. The industry is estimating something around, say, varying between 12 to 18%. But what estimate we have now, if the same guidelines remain, the estimate that we have is that it will impact us by 13 to 15%. But our LCR, you must have seen, is quite high. We are far above, say, above the prescribed limit. So it's not going to be a challenge for us, but impact is going to be there. Yeah.
Okay, so you have not been able to quantify the impact yet, but of course this is something which is...
Yeah, the impact will be around 13 to 15%.
13 to 15%. Okay. Last question before we let you go, Mr. Samra. You know, you do have around 68% of the total loan book coming in from rural and semi-urban areas. We've been talking about higher inflation, rural recovery, which is, of course, improving according to some industries, but just wanted your take on that. Is that something which is working well?
Yeah, it's working well for us, and the type of the customer segment that even we cater to in rural and semi-urban areas. We cater to middle income group segment. Even if we are in agri, we cater to middle income group farmers. We are not there in small and marginal, and we are not there for high net worth farmers as well, very big landlords. So the type of segment into which we are, say both in rural and semi-urban. Semi-urban, we are seeing a growth in small units, MSMEs, traders, where we are very much into that. Even for Q1, we have the focus has been more on MSME, where like MSME have contributed 25% of a growth in Q1, and similarly mortgages 25% and agri 22%, and the rest being others. Yeah.
Thank you so much for joining us. You know, we have to cut short our discussion today due to paucity of time. Thank you for joining us. Let's now cut across to the management of M&M, which is addressing the media after the Q1 FY20 fund results performance.
And you will see continued results on that as we go quarter by quarter. Overall, consolidated profits are up 20%. This does exclude the impact of one-timers that we had last year in the profits, which was a gain on KG Mobility and a gain on the sale of Mahindra CIE shares. So excluding that, PAT from a consolidated standpoint is up 20%. ROE is at 19.4%. And as we look at the overall consolidated picture, revenue up 10%, profits are at 3,283 crores, as I said earlier, up 20%, excluding the one-time gain last year. The key drivers of our profits, auto and farm combined up 18% for the quarter. Beyond the market share gains, SUV capacity continues to increase. We have tripled capacity in the last 4 years. And that tripling of capacity now helps us in terms of being able to meet the backlog of demand and be more aggressive in the market as well. And despite being more aggressive in the market, we've been able to deliver a very strong margin performance. Tech Mahindra is up 23% off a lower base, and therefore we continue to maintain a high bar for the business to get back fully from a turnaround standpoint. Mahindra Finance is up 37% off a pretty strong base. And on the growth gems, where we've got a 5x challenge, they're again on a strong path, up 34% year over year. But more than profits in growth gems, what we look at is the underlying businesses and are they being set up for that 5x growth, because we're looking for long-term growth of that business, not short-term profit. So while it's up 34%, this is not a number that I look at very closely to say it should be up in high numbers. More important is the underlying businesses, and they're at this point doing very well. So let's focus a little deeper into each of these. Auto continues to be the number one SUV player. Volume is up 24%. We had talked about mid to high teen volume growth when we talked about F25 a few months ago. And in the first quarter, at least, we have exceeded that by growing 24%. Capacity I spoke about, and the margin expansion is 180 basis points. Again, a very healthy margin expansion on the auto front. Market share we spoke about, resulting profit is 1,330 crores from an auto standpoint, which is now inched ahead of the farm profit, which is 1,238 crores. And farm has seen some improvement in domestic outlook, but industry has been relatively flat. Hemant will share the details for the first quarter. And despite that, due to the market share gain, we've seen good progress in this business. International markets have moderated, but due to strong execution, margins gone up 100 basis points here, which again in an industry like farm is a pretty tough act, and a lot of kudos to the team to drive that margin expansion. Mahindra Finance, in addition to the asset quality and growth, technology is a key part of our turnaround, and we have 100% of branches now under a central processing system with a much better tech system. A lot of work has been done on technology. We aim to be the best in class in the industry, and we are well on our way. That's the remaining year and a half or so of turnaround that Mahindra Finance will undergo, is largely from a tech standpoint. And here you see almost 500 crores of profit for the quarter for Mahindra Finance. This is a pretty remarkable number. We're at 497 right now, just shy of that 500 crore number. Tech Mahindra, the new organization's focused on service delivery. The demand signals are still mixed. You see good numbers from a previous year comparison standpoint, but again, to be very transparent, previous year was a low point, and therefore we look more at, are we on track with the turnaround plan as compared to the numbers of the previous year. Logistics is on a better track now, though not completely out of the woods as yet. It's executing far better, and the express business now, despite showing losses this quarter, is on a very good track. And as committed by the management team there, we expect that business to turn around by the end of the current quarter that we are in. Revenue is up 10%, but EBITDA has been hit by the express business and therefore is down as compared to the previous year.